Welcome into the crypto bunker. Today, I want to talk to you guys about the macro setup that we're in right now. And this chart right here is from Carter Worth, who is on Options Action on CNBC. And I think the show usually airs at like 5 or 6 p.m. Eastern during the week. These guys are really good chartists. And this is a really interesting chart that shows the S&P 500 index from 1987 during the Black Monday crash of 1987. If you had bought the low that week of that crash and you rode it up to the 2000 bubble, you would have been up 617%. We then had, it was basically 12 years and 5 months. We then had an 8-year, 9-month period of negative 57% for stocks, basically sideways and down, double top, double bottom, I guess you could say, but ultimately negative 57%. If you had bought that bottom on the 2008 crash and you held until January of 2022 this year, you would have been up 621% and in 12 years and 9 months. So it's really interesting that both of those returns were pretty much exactly the same, and they were both exactly the same time length. So, basically what I think he's getting at and what I believe is happening is that we have a potential here to now be in an 8-year, 9-month bear market for stocks. And one thing that usually outperforms when stocks are down is gold. Gold relative to S&P 500. When we see the negatives, you can just see basically these volatile times, and then you can see the S&P 500 return, and you can see the gold return. And some of the times have been a lot, some of them have been negative. This is the only time it was more negative was in the 1982, because it had already been stretched a lot at that time. But it basically always outperforms stocks in these environments. And so I wanted to cover basically stocks and in the precious metals sector, because I think that this is actually setting up to be a, possibly profitable time, in the next 5 to 10 years in metals, in energy, in oil, in, uranium, in copper, in solar energy, potentially. These are all counter cyclical markets. Okay. So when I say counter cyclical, I mean during periods of volatility in the stock market where you cannot get a good return in equities for an extended period of time. And this is where I believe we're headed into. I do think we're going into a recession. Demographics aren't looking great, and there's things that are happening in the future that I believe are obviously shifting. The one thing that could sort of stop this, I guess, is like a major shift, which is possible because we are facing sort of a fourth turning type of event, 90-year, end of debt cycle type of event. But I do think that gold in this environment will also do the best. With crypto, this could be crypto's moment to shine as well, because crypto was always supposed to be uncorrelated. It was always supposed to be the counter cyclical trade of the future. But I don't think that that's going to happen, in my opinion. I do think that crypto will participate with the stock market and will sort of go sideways and down for potentially 8 to 10 years. And I know this is a lot to hear. Obviously, I've been a crypto bull. I've told people, not financial advice the whole time. I've obviously tried to get people out more than probably any other channel. Um, you know, um, I've obviously gone back and forth because it's hard to leave crypto fully. I'm going to have my staked Ethereum for the duration of whatever happens for whatever amount of time, because I do believe that it's such an asymmetric return that you still do need exposure to crypto, but you don't need to be all in on crypto because, again, the upside is so high. And if you hold for a long period of time and you're earning that interest on your Ethereum, then, and Ethereum is sort of a bet on the entire space anyway. um, then you're not really gambling trying to bet on these different stories and different narratives that you're sort of forced to bet on. It's like gambling with some of these altcoins because there's no revenues, right? You're just trading a token, and we're basically supposed to assume that everything's going to be tokenized in the future, and everyone's going to be in the metaverse, and we're all going to be playing video games with each other, having meetings in the metaverse and things like that, which I think is kind of unrealistic for a recessionary environment. um, I think crypto does the best probably in a deflationary growth period of time and not a inflationary sort of loss of growth period of time. So let's get into where we can make money, because that's what this channel is all about. It's all about where can we make money. And I hope that I did that for you guys in crypto. But I do believe that we have hit now a bottom in silver. I do think that we have bottomed out. Um, and as you can see, we're in this perfect channel still. And we hit this bottom 1, 2. This is the third time, okay, that we're hitting this on a descending wedge. This is usually where you would want to get long. We have the 200-week moving average. We're obviously a little bit below it, but that's okay. I would say this is similar crash, not as bad as the 2020 crash. Now, if stocks, go crazy low, which is possible, I don't think that'll happen right now. It's potentially going to be lower, but I don't think that will happen in the near term. I think in the near term, we're going to see risk assets, including crypto, go up from here. And I think that gold stocks, silver, and silver stocks will participate in that because they are oversold at this point. And basically, like, this is the bottoming out process of what we just went through of this entire thing. Okay. So this is kind of the capitulation moment, I do believe. And let's cover some of the stocks that are involved here. And once again, we have the GDX, which is in this channel here. And we are touching the bottom of the channel again. And what I think, can happen here is that we can go to the top of the channel again. That doesn't sound too crazy, but that is a way to make money. Now, if we use this as a bull flag, which I am, you can take this flag and you can put it over here. And excuse I'm going to get a little smaller here, but you can target upwards of $62, which is more than 100% gain. Now, that's the type of gain I'm looking for in the long term, sort of. So probably like 2 years, within the next 2 years. I do think it could go higher. If we look at stocks like Agnico Eagle, we are seeing this sort of flagging formation where we're seeing a descending wedge. We didn't touch the bottom of this channel yet. I don't think that we will necessarily, because it's just kind of too low at this point. And I do believe that Agnico Eagle is getting picked up here. We can see on this candle that we are getting some good action here. And I'm going to add volume in because volume is very important. Volume basically means that, potentially that someone knows something. And, we can look at the volume on this hasn't really come in yet. If we look on the hourly, I mean, it did actually on the way down. but in comparison to back here, it's not as much volume. So let's look at wheat and precious metals. This is another one that I really like. On the hourly, we can see sort of a capitulation. We came down to, levels that, were sort of rivaling these bottoms. Wheat and Precious Metals is a royalty company, so basically they don't even have a mine. They just do contracts with mines, and so their average price of gold is like $400 that they pay for, and then they sell that gold out. So they're making like money, hand over fist right now with where the market is and where this is. But sometimes these things trade, in the same light. But I do believe this is a good chance to pick that up there, for sure. And even this one, Equinox Gold. Equinox Gold is run by Ross Beatty, who's one of the best, basically legendary investors in the space. He runs Pan American Silver as well, um, who Bill Gates is a huge shareholder of, I believe. This is one that is actually as low as it was in March 2020, which is pretty ridiculous. They have had some issues with inflation. Their costs have been pretty high on their gold that they've produced in the past quarter, but they are an early sort of stage company. They're also kind of a major producer, not a major, but probably minor producer. But their price to earnings ratio right now is so good. It's like 4, which is really cheap. So to me, I look at that, I look at the management and the team, and I look at the potential here on this pattern. The chart has to be right for me to get involved. And this is one that I do think is right. We're hitting the bottom of this channel. We are at the bottom of where we were in March 2020. We have to think that he's advanced the project since then. It's been 2 years, and I believe he has. That's why the price to earnings ratio is so good. So the trade usually here where you touch the bottom again here, for the second or third time on this type of pattern is usually the top of this. So we're looking at like $14. That's like over a 300% return. I'm not saying that'll happen tomorrow, but we'll see what happens. I mean, another one is First Majestic Silver. Another one that sort of trades in the same pattern, and all of these are setting up really well right now. It's hitting 2 sort of trend lines. It's hitting this, and it's also hitting this long-term trend line here, where we are making, excuse me, higher lows on this pattern. And so again, I think, we're looking at like the potential of, over 300% here for First Majestic Silver. Now, obviously that is if gold and silver reverse here. But the thing is, the Fed has already plunged us into recession with 1.75% rates. They can't get to 5%. And I do believe that 5% is pretty much the low that we're going to see in inflation. And once they pivot and stop raising rates and inflation kind of still persists and it's not really coming down enough, the markets are going to hate that in terms of the equity market. And that's when people really start to shift over to gold and silver because they're scared and because they know that gold and silver are traditionally money and traditionally a hedge against this type of environment. So you have to know your history to understand where we're headed in these markets. And another one, Endeavor Silver, another one that's playing out here with this pattern, and I'm looking for this high of 750 or more. If you count this as a bull flag, we're looking at around $11. Fortuna Silver Mines is another one that trades in a really good price to earnings ratio. It has the upside. It has a lot of gold exposure to it as well. So again, none of this is financial advice, but we are trading in a little bit of a similar pattern here. We're down at these lows, even near the March 2020 lows. So if we do break above, we could be looking at something along the lines of, again, hitting this top range here of $9, which is again over 300%. I do like BlackRock silver. The chart I don't love, but I know that the team basically has silver in the ground at like $2 an ounce, so they have a really good financial setup. There's a few others. I like Franco Nevada because it's a royalty company, and we're also hitting this long-term trend line. We're catching support there, sort of similar to this, and then March 2020. So anytime we've crashed down to this support line, we've gotten a good amount of support there. So expect it to come back up to the high, 178. This is just sort of a leverage play, again, on gold. This is one of the major royalties, sort of similar to Wheaton Precious Metals, where they actually don't have a mine. So they're not exposed to inflation, which is nice. In terms of like costs, like oil and things like that. Another one I've been looking at is Sandstorm. This is another royalty company. We're obviously hitting the bottom of this trend line here. And so again, expecting it to come back up to 10, which is, almost 100% gain from here. And that's just like on an average day. I mean, that's like, gold, 1950 or something, would come back up to here. But gold at 3,000, then we're looking at, much higher, which is where I think we're headed. Gold 3,000. And so you kind of, you're playing a lot of these as a play on that. This is Royal Gold, which is again a royalty company, hitting sort of bunch of these trend lines that I drew out. So yeah, and then I mean we can look at First Solar. This is a solar company, I do believe. It's interesting to sort of look at this solar ETF, which actually kind of looks like the silver chart, which is cool because obviously silver is needed in solar. So this is sort of what the silver chart would look like if it wasn't, so manipulated. But we do see from the March lows, this is exactly what silver did. And then silver had, consolidated within a flag. And so I do think that if we break out here, that just means that investment is going into silver basically, because obviously each solar panel takes about 0.64, I think, ounces of silver. So that is something in the future that we're obviously going to be focused on as a country. So I do think it's important. And, even some copper mines, because copper is needed as well for a lot of this electrification. So Southern Copper is hitting the 200-day moving average. A nice little sell off here. I am going to get into that, and some of these pay really good dividends. So if we're looking at this as an 8 to 10 year counter cyclical trade, we're looking at the potential to really get some dividends and be a long term investor in some of these. And so again, that's just one of the copper plays. We can also look at uranium, because uranium is something that I think in the future we'll need. Energy Fuels is an American uranium company. There's only a few of these, so we're looking at this Energy Fuels, and then we're looking at UEC, which is an energy company as well. And if I can find it, this is just actually, you can buy physical uranium, which is cool. The Sprott Physical Uranium Trust. I do think it's a, decent time to buy uranium. I mean, it's hard to tell because this isn't like the actual uranium price, but it does track it. So it's sort of similar to like an ETF for gold. But again, these are wide, and you guys know I don't like, accumulating necessarily when things are wide. So I do think that there could be sort of a rollover on uranium, but at the same time, you can look up. Japan is restarting their nuclear. Germany is looking really dumb for not using nuclear. And then we have the US who's saying they may need to use nuclear in the future. So a lot of good news on the nuclear front. If you're looking for basically the best uranium miner, um, it's going to be UEC, which is Uranium Energy Corp. And again, this is one that you can accumulate on this trend line pretty steadily, and we can look at like over 100% gains to get up to this trend line. So it's sort of a ascending, um, widening wedge here where you can just trade from trend line to trend line if you really wanted. So those are some of the names I like. Not financial advice. Hopefully you guys got something out of the video. I mean, if you're still here, I'll cover real quick on crypto. Like I said, I do think crypto could rip here. This is just an example. Don't mind my prediction there. That's just for fun. But yeah, I mean, we're at the 200, just like I've said, 200 week moving average is always the base case. So yeah, we could definitely come back up and trade. We could even double from here easily. You know, um, we could sort of just base out. We could sort of bounce around on that trend line up there. Um, if we look at the daily moving averages, we could definitely come back up and try to test this 200 day again. It probably more like the 150. So yeah, we could double. I do think that we'll get a little bit of a rip here. I would not be surprised to see, yeah, a nice 30% gainer on crypto. It's not, my base case. I don't really know. I don't really have a base case. I just don't really feel like being in this market anymore. I don't think that crypto is what we thought it was. It's sort of feels more of like a scam to me as the prices go down and down. Um, but again, like I said, I think everyone should have exposure to it. I'm just not trying to be like all in on it and like grinding it out when we could be in like an 8-year bear market. I mean, let's look at something like Oracle, for example. Okay, so this is a tech company, and let's just look at what happened to this in this time frame after the dot-com bubble. So if we were just in the dot-com bubble, which I think we were in crypto, you could see a sideways action for 10 years. But it's crypto, so everything moves faster. So maybe that's 5 years or something. But I'm just saying that you have to realize that those all-time highs are numbers that you shouldn't have in your mind anymore. Those don't exist. There was a lot of free money floating around. There was a ton of leverage in the system that was able to push the price up. There was a lot of illegal activities happening. There was a lot of scams, a lot of things that pushed the market up artificially. The Fed having, easy money, the stock market going up, everyone's getting rich. It was basically the biggest bubble in the history of markets. And so that's not happening again. So you have to realize like it doesn't matter how much adoption happens, like Facebook and Instagram using Ethereum or whatever. That stuff doesn't actually matter because the money that's needed to put into those coins and market is not coming back. And um, again, I think that this isn't a market to be messing around in. It's probably something where you just want some exposure and then you just leave it alone for 10 years. And, for me, I'm focused on, like I said, those different sectors for 10 years. And I'm trying to I want to own copper miners, natural gas producers, oil producers, gold, silver, solar producers, uranium. Those are the markets that I'm looking at for the next 8 years, because those are counter cyclical to the stock market. And that's where I'm at. I'm basically allocated, to those things, and I think that those will outperform. We can also look at gold, and we can look at basically this bull run from, again, 2000 dot-com bubble, which we just had. Remember, we just had this. Okay, so this in gold, we just had this in the stock market. It was 2000. Then this is what happened in gold. Okay, massive run to 2011 until then stocks took over. So then gold basically went sideways for 10 years, just like it did here when stocks were doing well. So stocks do well, gold goes sideways. Stocks do bad, gold goes up. Stocks do well, gold goes sideways. Now stocks do bad, gold goes up. Okay. This is the potential of what we're looking at here. This would take us to about 2026 and $5,000 gold. That's what I'm predicting. That's what I'm looking at. If we look at, you can see the long-term sort of charting of this does take us to, around those levels. And, so again, if these play out, if it does go to $5,000 gold, these mining stocks are going to, go completely insane. I mean, we're talking about, this is a massive cup and handle on Agnico Eagle Mines, and you're getting paid like 3% dividend. So if you own like thousands of dollars of this and you reinvest those dividends, you're making really good money, and or you don't even need to reinvest them. Maybe you just pocket that money and go buy a pizza every week with it or something. But I mean, we're looking at like $120 Agnico Eagle easily. And that's like a $2,500 gold. So I hope you guys got something out of the video. If you did, please like, subscribe, and have a great night.